Buying life insurance can seem like a very complicated task, especially here in Canada. There's so much noise on which product is the best for you, and maybe it's UL, maybe it's whole life, maybe it's term life insurance. It can be hard to determine if you're making the right decision or if you're making a mistake. And so I've been in the industry for almost 10 years now, and of course I have my own insurance policies on myself. And in today's video, I'm gonna go over the top 8 mistakes that I wish I would have known before I bought my own life insurance policy. What is up, guys? For those of you new to the channel, my name is Philip Sutter. I'm the founder and CEO of Affinity Life, where we've helped thousands of Canadians find the right life insurance coverage at the right price, all from the comfort of their own home. So if that sounds interesting, I'll put a link in the description below and you can check it out. But without further ado, let's just get right into the video. Starting with number 1, don't let fear drive your decision for purchasing life insurance. So I'm part of a few different Facebook groups for life insurance. So it's usually just brokers or agents, and we talk about sales and sales tactics and yada, yada, yada. And one of the things one of the other brokers brought up was, hey, he met with one of these clients and he suggested that he get whatever, $500,000 or $1 million of life insurance. The client had a wife and had kids, and for whatever reason, he decided to turn down this one salesman. He said, no, thank you. Maybe he wanted to go with someone else. Maybe he didn't like the product. Maybe he thought it was too expensive. I don't know. But regardless, this advisor came on to Facebook and immediately started talking trash, about this client, saying like, oh, he doesn't love his family. He doesn't love his kids. Wait until he gets into a car accident and, something bad happens to him and his family's left with nothing. And, this advisor is trying to make a case like, oh, I talked to him and he should have got it. I'm trying to make sure he knows he doesn't care about his children. And I'm just like, whoa. Like, hold on, okay? Like, just because he doesn't buy life insurance from you or buy life insurance at all doesn't mean he doesn't love his family and doesn't mean he doesn't care about his family. Yes, of course, it would be very financially difficult if he did pass away and he didn't have life insurance. But at the end of the day, I think advisors, or I shouldn't say all advisors, but some advisors definitely try and put fear and guilt into you to say, you need to get this right away. You need to buy this product. Do you not care about your family? And yes, it may be important, but if you kind of get this weird feeling from the advisor, don't let fear drive your decision. Take a step back, assess what you need. Maybe he suggested you need $1 million. Maybe you could only afford $200,000 or $250,000 of a face amount. It's better to go with a smaller amount that you're comfortable with than trying to, appease the advisor and get what he recommended. But at the end of the day, don't let fear drive your decision. Take a step back, look at what you need, and then get that. Number 2, term life insurance is probably just gonna be the best option for you. Now, here's the thing. Like I said, there's advisors saying everything on social media. You have universal life, you have whole life, you have, in the States, they have even more products, index universal life and YRT and UL and all this other stuff. At the end of the day, term life insurance is probably going to be the best option for you. It's the most inexpensive. And for the majority of Canadians, especially for the majority of Canadians that are low to middle income earners making under $70,000 per year, $80,000 per year, term life insurance is incredibly inexpensive. There's no penalties for canceling it. You can change your policy later on down the road. You can decrease the amount or apply for new policies and ladder them as you go on. And it's probably going to be the best option unless you have some type of complex estate planning need, like you have, 5 or 10 rental properties and you're going to hold them and you might need to do some tax planning right now. Or you're a very wealthy individual, either as an individual or you're a business owner, and maybe you're looking at having some type of alternative investment, and that could be life insurance, but there's a lot of strings to attach. Unless you're one of those 2 different categories, you're probably gonna have the best bang for your buck getting a term life insurance product. You're not gonna regret it later on down the road and think, oh, why am I spending, $2,000 a month for this policy? Now I'm 3 years in, and you'll get into one of these sunk cost fallacy moments where you're thinking, okay, I've already put so much into it. I have to keep going with it because I'm gonna waste my money if I cancel it. For the majority of Canadians, don't get suckered into these big life insurance, policies, these big whole life policies, or even small ones for that matter. It's probably the best option for the advisor as they make way more money on that. But for you as the consumer, term life insurance is probably going to be your best option. Number 3, wait until you actually have a need for life insurance before you buy it. Now, a lot of other brokers in the industry will talk about, oh, hey, you should buy life insurance when you're maybe 20, 21, 22 and lock in your rates because you're younger and it's going to be cheaper. Now, this sounds good in theory. However, if you actually start to think about it a little bit, if you were 10 years old and some auto insurance salesman came to you and said, hey, you should buy auto insurance right now when you're 10, lock in the rates, because when you're 20, they might be more expensive. You might, have something that comes up, or the rates might increase that's going to cause it to be more expensive. Well, you're 10 years old. Do you have a car at that point? No, probably not. So this guy's saying, hey, buy car insurance, and when you get a car, you'll already have it. Does that make sense? If you think about that, does that make sense? No, of course it doesn't. You wouldn't buy car insurance when you don't have a car. Why would you buy life insurance if you don't have loved ones in your life that would be financially impacted if you pass away? So like I always say, the purpose for life insurance is to protect your loved ones that are financially relying upon you. And if you don't have that, don't get life insurance. And another thing here too is they'll also say, lock in your rates when you're young. Here's the thing. Life insurance rates from age 20 to age 30 are virtually identical. Actually, sometimes it might be cheaper at age 30 than it is at age 20, because statistically they know that a lot of accidents can happen from age 20 to age 30. You're still settling into your life. Things are still happening. Usually at age 30, you're married, settled down, you have a house, and you're a lot more responsible of an individual. So a lot of the times it can be cheaper at age 30 than it is age 20. So you're not actually saving any money. The only time that I may consider buying life insurance is if you have some type of hereditary illness that runs in the family that you might get as well, or if you're just maybe very unhealthy and you're probably gonna have some type of adverse health effects later on in life, then you could lock in your rates at a younger age. But for the majority of people, it doesn't make sense to lock in your rates. It's probably gonna be cheaper at age 30 anyways, and you should wait till you actually have a need to purchase life insurance before you do so. Number 4, you should probably avoid just a bunch of complicated, unnecessary riders that brokers can attach onto a policy. So when you buy a life insurance policy, they can attach all these little things. Hey, would you like an AD&D rider? Or maybe you would like a critical illness rider. Or maybe you'd like a disability rider. Or maybe a hospital benefit rider, yada, 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 yada. This is kind of like the supersize or the upsize. What do they call it at McDonald's? Would you like to supersize your meal? This is kind of like the supersize in the insurance industry. So we have an initial sale, which is you came to me and you wanted to buy life insurance because you have a need to protect your family. Now all of a sudden I'm trying to get you, on the hot apple pie, the larger fries, the larger Coke, and all the extra add-ons that you probably don't need when you originally came to me for life insurance. And that was your primary need. Now I'm just trying to make an additional sell. I'm trying to upsell you on all these other things. Most of the time, they're probably not going to be necessary. And here's the thing, if you want one of those policies, you can always just go out and get a standalone policy on your own. You don't need to all of a sudden add it to the existing policy or add it to the original policy that you wanted to get. So in most cases, it's probably not the best option unless you think you legitimately need that type of insurance policy. And one more thing, avoid return of premium just all the time. It's never really a good investment. Usually if you work out the math, it equates to like a 2 to 4% return on your money, meaning that if you just pay for the policy without a return of premium and you take that additional amount that you would have put into it and just invested it, the return is going to be somewhere like 2 to 3%. And usually with the investment, if you stop paying into it, you're not going to lose it. Whereas with the return of premium, if you miss a few payments, all of a sudden you lost all that money. You're not going to get it back. You can only get your return of premium after 15 or 20 years. It's not worth it. Don't go with return of premium. It's almost never a good option. It's usually just a waste of money. Number 5, it's okay to change or cancel your policy. So like I mentioned originally about the sunk cost fallacy, some people get into this mindset where it's like, I already put, maybe a couple $100 or a couple $1,000 into this policy. Now I'm committed to it to the very end. No, you're not, except for universal life insurance. All the other ones, such as whole life or even a term life insurance product, you can cancel it at any point. There's no penalties or fees. With universal life insurance, there is some fees known as surrender values or surrender charges that they have during the first few years. But if you got somehow convinced into buying one of these policies, whether it's a whole life or a universal life, and you're kind of questioning yourself thinking like, did I make the right decision? It's okay to just cancel that policy and change that policy and get a cheaper policy, such as an inexpensive term life insurance product. Don't get suckered into this like sunk cost fallacy where it's like, I'm committed to this now to the very end. Because a lot of times I see clients that actually waited until the very end. They paid into it for 20 to 30 years and it wasn't what they thought they purchased, and they still ended up losing all their money after 30 years, and they could have just canceled in their second or third year. So Don't get suckered into paying something for the rest of your life just because you put some money into it. It is okay to cancel or change your policies as you grow into them. Which perfectly segues into point number 6 here, which is term life insurance isn't a static type of life insurance. What do I mean by this is a lot of people come to me, they say, hey, Philip, I'm trying to get some term life insurance. Should I get $500,000? Should I get $1 million? Should I get a term 10? Should I do 20? Should I do 30? Should I do term to 65? And they're trying to find the perfect policy that they never have to change for the rest of their life. Here's the thing, term life insurance isn't a static planning tool. It's not a static type of insurance. You can change it as you move forward. So number one, you can always decrease your face amount at any time. So if you got $1 million policy, and let's say a couple years down the road, your need for life insurance changes. Maybe you paid off your house. Maybe you came into some sum of money and you don't need as much anymore. You can always reduce your monthly premium and say, hey, I only need $500,000. Let's just go back to $500,000. That's the first thing. The second thing is usually from age, let's say 25 to 50, the premiums aren't going to fluctuate that rapidly. Like that age right there, the 25 to 50. I mean, of course it is going to go up, but it's not a exponential increase. It's not like it's going like this. It's just kind of like, something like that. So if your needs change, that's fine. Buy what you need today and then reassess when something happens. Maybe today, maybe you and your partner are married, you don't have children, you have a house. So you think, okay, well, if I pass away, I don't want my partner to be strapped with these huge mortgage payments that we have to come together to make now. So let's put some money aside. Maybe that's $250,000, maybe that's $500,000. That's gonna be enough to take care of these expenses. So she's not strapped or he's not strapped with this large mortgage payment, trying to make it on their own and also grieve the death of their partner. Okay, great. Well, let's say 5 to 10 years down the road, now you have 2 children. Now you're thinking, okay, well, we still have this mortgage. Oh, and we bought another vehicle because we needed the minivan and, I have the SUV. And now we have 2 children and they're, one's in daycare and yada, yada, yada. Our monthly expenses are going up. And if one of us passed away, then it'd be even more of a financial impact. Great. At that point, now we can either get a new policy altogether or just stack on another policy. So you had $500,000 in, let's say, a term 20. Now let's get another $500,000 in another term 20. So you don't have to have the perfect answer today. Buy what you need today with some planning for the future, but also you don't have a crystal ball. You don't have a magic 8 ball. You can't see exactly what's going to happen in the future. And it's okay to reassess and either decrease or increase your policies or add more policies in the future. Number 7, and this one should be a little bit obvious, but some people it's not obvious, is don't lie on your application. So this is one of the biggest reasons that a life insurance company, and actually one of the only reasons that a life insurance company can deny a claim here in Canada. So the way that it works is there's 2 main reasons why any insurance company can deny a claim. Number 1 is suicide within the first 2 years, and number 2 is intentional fraud on the application. And so a lot of the times people will think, well, after 2 years, that contestability period is up. If I lie in my application the first 2 years, I should be okay after, I just have to wait. No, that's not the case in Canada here. In Canada, if you committed fraud on an insurance application, AKA you lied on that insurance application, it doesn't matter if they find out in year 1, year 2, year 5, or year 10, they can deny that claim if you committed intentional fraud on your application. So this should be pretty transparent, but I still run into this with some clients saying they bought a policy 5 or 6 years ago and they did lie on that application and they're curious what the consequences are. These are the consequences. You don't know if the insurance company will deny it or not, or if they are going to find it out. But what's the point of paying for these premiums for this peace of mind if you don't have peace of mind? If you're wondering, are they going to deny it or not? I know I lied on my application. Are they going to find out? Just skip that altogether. Tell the truth on your application, you'll be fine. And number 8, the very last mistake you should try and avoid when purchasing a life insurance policy is do not blindly trust your advisor, any advisor. If he's saying something or she's saying something that just sounds maybe too good to be true, or it sounds like something's fishy or something's off, you can always do a number of different things to fact check it to see if what they're saying is the truth. Now, I did make another video on this and I'll put that video right there and you can check that out, or maybe it's there. I don't know if it's there or there, but I'll put it somewhere and you can check it out. But in a nutshell, a couple things that you can do. Number one, if you're just curious about the price that they quoted you to see if it's on par with some of the other companies here in Canada, you can go to a website called www.winquote.net and you can see all the prices for all the different life insurance companies in Canada to see if they quoted you one that's maybe one of the cheapest ones or maybe one of the most expensive ones. Number two is there's a Facebook page here in Canada. It's called Life Insurance Canada, I believe. You can go to that and join it. And just as a consumer, I think you can post anonymously as well. This group is filled with brokers from all different companies, from very good companies to bad companies, but it's a very public forum. So if you have another advisor saying something that just sounds a little bit off, post that into the Facebook group and get the opinion of other brokers to see what they say, because again, this is a public forum, so no one's going to be able to just sneak something underside and say, oh yeah, this is how it works, because otherwise, but no, that's not how it works. You're lying to the client. That's a really good resource. And of course, number three is researching, looking up different topics, watching YouTube videos like this one today to figure out if exactly what they're saying is true or if just something's a little bit off and they're just trying to sell you an insurance policy. I hope that makes sense. And if you guys have any questions, feel free to drop them in the comments below and I'll get back to them. And as always, if you guys are enjoying this content, all I ask is that you give it a thumbs up and I'll see you guys in the next one.